Yesterday, both the European currency and the British pound edged sharply higher against the dollar, driven by statistics on US inflation. Data showed that consumer prices rose by 0.1% in November as compared to October's reading of 0.4%. On an annual basis, prices advanced by 7.1% last month, down from 7.7% in October. This indicates that the US Federal Reserve copes with its task of taming inflation. Its high interest rates are holding back consumer spending, thus justifying themselves. Even though the euro and the pound sterling have gained value, their further bullish run is in question. The situation may change as the Fed's meeting and a press conference by Fed Chair Jerome Powell to be held today may weigh down on the currencies. Notably, a few weeks ago, the head of the Fed said that it was time to slow the pace of coming interest rate hikes. If the regulator raises its key policy rate only by 50 basis points, the euro will most likely extend gains. However, much will depend on Powell's comments on the bank's plans for the future. The focus of market players will be on the highest level of interest rates. Most expect the Federal Reserve to take its benchmark policy rate to 4.75% this time and to 5% next year. In addition, traders are hoping to receive some clues as to when the regulator stops raising interest rates and begins to pay down them in order to deal with economic problems and avoid a recession. If Powell hints at continued aggressive rate increases, the euro may halt its rally and even enter correction. In case the central bank announces that there is no need to further tighten monetary policy, the European currency and the British pound are likely to gain strong upside momentum against the US dollar. In addition, today's macroeconomic calendar includes data on UK consumer prices. Economists project an annual increase in the consumer price index of 10.9%. On a monthly basis, the consensus estimate of November's increase stands at 0.6%. If the readings are in line with analysts' forecasts, the upside for the British pound may be limited. Furthermore, traders may take notice of data on industrial production in the euro area as well as export prices in the US. However, these reports will take a back seat as the focus of market participants will be shifted to the Fed's meeting. From a technical point of view, the 1-hour euro-American dollar chart shows that 1.0655 acts as the nearest resistance level. If the price consolidates above this mark and tests it from the top down, the euro will rise sharply to 1.0687 and 1.0714. This scenario is possible only if Powell takes a dovish stance and the Fed announces less aggressive policy plans for the next year. A false breakout at 1.0655 will create a sell signal. In this case, the euro will most likely correct to 1.0612 and 1.0578. Long positions at 1.0612 in the hope of a continued bullish trend initiated in November can be considered only amid a false breakout. At the levels of 1.0548 and 1.0543, I recommend going short on a rebound with a view to catching an intraday correction of 30 to 35 pips. In the event of a rally following Powell's speech, trading against the current uptrend is too risky. Of course, if you prefer to earn on rebounds, you can consider entering the market at the levels of 1.0714 and 1.0741. Speaking of the British pound, the situation is similar. According to the chart, bears have won back about 100 pips of their recent losses, resulting from the pair's recent surge. Now the focus is on 1.2342. A false breakout at this level following the release of UK inflation data will create a buy signal. Alternatively, traders may open long positions at 1.2295, counting on a continued bullish run. Long positions on a rebound can be considered at 1.2248 and 1.2209. The principal task of bulls will be to push the price up to 1.2389. If the price consolidates above this mark and tests it from the top down, another buy signal will be generated. In this case, the pound sterling will head for 1.2439. A stronger upward move to 1.2484 and 1.2516 is possible only after Powell's statement. Likewise, I do not recommend entering the market against the trend. Best of luck.